Good evening. I hope I'm audible and visible. So in the previous class, we have already, made major discussions on bonus issue of shares. So today we will be doing one more question on bonus, and then we will be moving on to the rights issue part that's there in our syllabus. So let's very simple bonus issue was we discussed a problem, two, three problems also, bonus issue, bonus stock call. So we discussed all of that in the previous class. Let's do one question which we had already read in the previous class. We'll be moving on to the right. So let's start with that. Good evening, everyone. Before we begin, good evening. So it was question number 5. So we had read question number 5. Yes, this is practical question 2 in your ICAI material. So the following notes pertain to Bright Limited's balance sheet as of 31st March. Authorized capital is given, called up and paid up. Issued capital is given, called up and paid up capital is also given. Reserves in surplus, capital redemption reserve is there, securities premium, collection and collected in cash, general reserve, fine. We read all of that. The company on 2nd April 2023, the company made final call on equity shares at 2 per share. So final call was pending, so they have made the final call. The entire money was received in the month of April 2023. On 1st June 2023, the company decided to issue the equity shareholders bonus shares as well. Okay. So let's start directly with the question. Now, first we will calculate how many bonus shares we have to issue. 2 shares for every 5 shares held. So see how many shares do we have in the question? How many shares have been called so far? 10 crore shares. This is the amounts are in lakhs. Be careful while calculating. So 10 crore shares is there, 8 called up. We will make this fully called up because you can't issue bonus shares without making it fully called, right? So that's one of the conditions in section 63. So we'll make it fully called and then we are going to go for the bonus issue. But we'll calculate how many shares we are supposed to issue. Now, so working note 1, calculation of amount of bonus. Calculation of amount of bonus. So under this, number of bonus shares first. So there are 10 crore shares, right? Issued. How many shares were issued? 10 CR. So 10 CR equity shares have been issued. Good. So take 10 CR. Into 2 divided by 5. The ratio is 2 divided by 5, right? So 2 is to 5 is what you will get. Sorry. Right, no, 2 for every 5 shares held. Yes. We're doing question number 5. Yeah. 2 by 5. So how many shares will you get? You will get 2 crore shares. Someone, the classes for additional syllabus that started day before yesterday, you will find all the live classes recorded in the YouTube channel. This is bonus issue we are doing. So in the same YouTube channel, in Trisha classes channel, you will find the earlier 2 classes on bonus issue. Amount of bonus issue will be 2 crore shares into what is the face value? 10. So 20 crores. Rupees 20 crores. Sorry, there's not 2 crores. How much is this? Is this 2 crores or 4 crores? 10 crore into 2 divided by 5. So it's 4 crores, right? 4 crores, and this is also 4 crore shares into 10 crores. So it will be 40 crores. If you want to convert it into lakhs, you just have to remove the last 5 zeros, right? If you want to convert it into lakhs, this zero you will take, you'll get lakhs. It's 4,000 lakhs. When we're writing the solution, we will also write it in lakhs only. So the last 5 zeros you have to remember. It will become lakhs in lakhs. So, so we are going to issue 4 crore more shares. Let's see if we need to adjust the authorized capital. Right now, the authorized capital is 20 crores shares. Now 10 crore shares were already issued. Add 4 crores to that, so it will become 14 crores. Is it within the authorized capital? Is it within the authorized capital of 20 crores? The answer is yes. So therefore, there is no requirement for uh, adjustment in the authorized capital. I don't have to do the working note too, because the number of shares will be 14 crores after the issue. So we don't need to do this. No adjustment required in the authorized share capital. I hope everyone has understood this. Now go to the journal entries. Let's start with the journal entries. Raw fresh format. The amounts will be written in lakhs. You can put the numbers in your calculator and then divide it by 1 lakh. That's all. You will get the amount in lakhs. This is journal entries in the books of Bright Limited. Why don't we do the working note too? That's because we have to see the authorized capital. The authorized capital right now is 20 crore shares of rupees 10 each. We had issued only 10 crore equity shares so far. Add another 4 crore to it. After bonus issue, it will become 14 crores. It is well within the authorized capital. So if it is exceeding the authorized capital only, I will have to adjust the authorized capital. Otherwise, no need to adjust it. It is within the authorized capital, right? Authorized is the maximum capital we can issue. We do that working note to see how much we have to increase authorized capital. Here, we don't have to increase the authorized capital. I hope that's clear. Deepak. So, yes. 2nd April 2023, the company made the final call on equity shares of rupees 10, 2 each, 2 per share final call they have made on 2nd of April of 23, right? So equity share final call account debit, 2 equity share capital. making the call. It'll be rupees 2 into 10 crores. 10 crores. So that will be 20 crores. You put the number 20 crores in your calculator, divide it by 1 lakh, you get 2000. Basically, the last five zeros you have to ignore. 2 into 1000, 2000. Being final call on equity shares made. Next, we have to receive that money. See, when we are receiving the money, the entire money was received in the month of April 2023. They haven't given what date, so I'm assuming by 34 they are receiving the money. So I'm going to write that date. 34/23, bank account debit to equity share final call account. Same 2000 lakhs, 20 crores. Being final call money received. Next, we will have to do the bonus issue. For that, I need total 4,000 lakhs. Here, if you remove the five zeros, you'll get 4,000 lakhs. So here you can write if you want, because the question was everything in lakhs only, So 4,000 lakhs I will need. Let's see what do we have. Uh, For that, we need reserves. I hope you remember the sequence of touching the reserves. We need capital redemption reserve. It's there 1485. Total 4,000 into the economic reserves. 1485 we have CRR. Then next we need security premium also I can utilize. It's collected in cash. So we need 515 more. I will take it from the general reserve. So 4,000 minus 1485 CRR minus 2,000 from security premium. So the balance 515 will be taken out or debited to the general reserve account. When is the bonus issue happening? Have they given me the date? On 1st June 2023. So how much did we have in the capital redemption reserve? 1485. This is 2000. 550. To bonus to shareholders. 4,000, no? 4,000 lakhs. Being 2 crores, 4 crores bonus shares. Same date, 1/6/23. Issue the bonus shares. For that, the entry is bonus to shareholders account debit. To equity share capital. So here the bonus issue gets completed. First, we debited the reserves and kept the money aside required for the bonus issue. And now we are making the bonus issue by crediting the equity share capital 4,000. Being bonus shares issued. So here the bonus issue was completed. Over. That's settled. Journal entries only this much. I hope all of you have understood this. Also prepare the notes on capital reserve and surplus relevant to the balance sheet of the company immediately after the issue of bonus shares. So they have not asked us to prepare the balance sheet as such. They have just told us to prepare the notes on share capital and reserves and surplus. Just two notes they have asked. So we will do only the notes to accounts. They have not asked the balance sheet. Remember, read the question. Don't do the balance sheet. Just notes to accounts is asked. So we will do only notes to accounts. That's what is required. Okay. So let me draw fresh notes to accounts. Okay. First, we have to write authorized capital. What do we have under authorized capital? 20 crore shares of rupees 10 each. Okay, this everything will be in lakhs over here. We have to give the disclosure also. In the notes only, we will give the disclosure as well. Thank you, Deepak, for reminding. 20 crore shares. They haven't not mentioned what these 20 crores are. Shares are. Is it preference shares, equity shares? Not mentioned. So I'm just going to write it as it is. So 20 crore into 10 will be, they have given already 20,000 lakhs. It will be 200 crores divided by 1 lakh. You can do on your calculator. So basically 20,000. And because it is authorized capital, we don't consider it anywhere. So underline it. What does underlining mean? Underlining means that we will not consider it for totaling. We are not going to consider it for totaling at the end. Next, authorized capital done. Next, we have issued and subscribed capital 10 crore equity shares, 2 crore. It's going to be the same for us. Issued and subscribed, called up and paid up. It's going to be the same. Why is it going to be the same? Because it was partly called up earlier. Now we made it fully called up. So I'm not going to write again. So what I'm going to do is I'm going to write over here issued, subscribed, called up, and paid up capital. It's one and the same for us. All the four things are same. Now it's fully called up shares. Earlier it was partly called up shares, but we made the final call and we've received the final call. So now we have equity shares. So there were already 10 crore equity shares. How many equity shares did we issue? Bonus issue, how many shares did we do? We did 4 crore bonus issue, right? So 14 crores will be the total shares now. 14 crore equity shares of rupees 10 each, fully paid out. Fully paid up shares. So that will be how much? 14 crore into 10 will be 140 crores. You can put 140 crores in your calculator carefully. Divided by 1 lakh. You'll get 14,000. 14,000 lakhs. 140 crores. Yeah. Correct, 14,000 lakhs. Next, we have equity preferences that has not changed as it is. Whatever is given, just write it as it is. 2 crore. What preferences are these? 11% cumulative preferences. Cumulative preferences of rupees 10 each. Fully paid up. That will be 2,000. 2,000 lakhs. Okay. All this is in lakhs. Done. That's it. Here we have to give a note. Totaling, we don't consider the authorized capital. That's why we are underlined it. Out of the above, a note over here. Out of the above, 4 crore shares, right? Bonus issue was 4 crore shares. 4 crore shares were issued as bonus shares. Thereby, no consideration was received. Thereby, no consideration was received. Done. One note done. Now the second one is for reserves and surplus. It's very simple. Reserves and surplus. You just have to make the list of the different reserves we have. If you have transferred anything for the sake of bonus issue, we have utilized some reserves, right? So we've transferred it to share capital. So such reserves will be minus. So CRR. CRR, capital redemption reserve, 1485. Inner column I wrote it. Utilized for bonus issue. All this has been utilized for bonus issue. So I'm going to subtract it, and therefore the closing balance will be 0 in the CRR account. Securities premium. The security premium also has been fully utilized for the sake of bonus issue. So we will empty that too. 2,000 was there, less utilized for bonus issue. Nil. Next up, I have general reserve. Out of general reserve, also we had utilized some, right? How much did we utilize out of general reserve? We have 1,014 general reserve. We had debited general reserve with 515. So how much will I be left with? 525. P&L account balance, yes. P&L account, that is surplus credit balance of P&L 273. I have not touched this, so I'll write it total. Outer column I wrote it directly, therefore. Now total it up, reserves and surplus done. 525 plus 273. That's it. Is the screen visible or is it stuck? Are you able to see the screen? Stuck. Yes, fixing it. Give me a minute. Is it fine now? Are we back? There's a lag. The O isn't coming on time. Okay, one second, one final fix. Okay. Now I think it is better. Everything is coming together, not in installments. Okay, so now let's continue our discussion. So that's about bonus issue. I mean, you can try the other two more questions in your textbook, easy questions. You can try on this basis. We've done everything relevant. There's nothing new left. There's one more question I will do at the end with the right issue. You know, right issue is a very small concept. Let's just finish it off quickly, and then we will move on to a new chapter today. So right issue. So let's understand what is a right issue first, and then we will discuss the different things. Very small concept, okay? 10 minutes discussion, not more than that. Even the problems are very tiny, not like bonus issue where you have it full detail. So here it's very, very easy. Let's quickly get done with this part now. Okay. So now let's understand what is a right issue and let's understand the different aspects over here. So as per section 62 of the Companies Act, okay, as per section 62, what is section 63? Section 63 was bonus issue. Now I'm going to deal with section 62 of the Companies Act. Okay, section 62 of the Companies Act. What does it say? Let's understand. We don't need the screen, just look at it. So what does section 62 say? Section 62 says that if you have, before you make an issue, now, for example, what may happen is, now, let's say I'm a shareholder in a company. I have started a company. I have co-founded a company with my friend. I and my friend got together and we co-founded a company. Listen to this concept clearly. I will tell you from the basic, the reason, everything I'm going to discuss with you. It's a little technical, but let's try to understand it in easy terms. So pay attention. So I and my friend started a company. Okay. Or take, for example, I started the company, not my. Oh, my friend was also there, but it was my idea. Basically, I was the idea, but to start, mine was the idea. I was the founder. To start a company, you need two people, right? So I got one person, generally my family, then later my spouse or my mom, my dad, someone came in as a co-founder. So I am holding, we have issued, let's say 1,000 shares. Okay, 1,000 shares have been issued. In this 1,000 shares, I am holding 800 shares. Initially, when we started the company, out of 1,000 shares, I got 800 shares. I bought it. 200 shares went to my friend. Okay, my relative, my friend. It went to my friend. Let's see. So now, what percentage of the company do I own? Can you tell me in percentage terms? How much percentage do I own? Because this is a very important point here. Okay, this percentage is very significant because tomorrow, if we have to have a say in the decisions of the company in the general meeting, right? We are equity shareholders. The company will ask us as to can we take this decision? Should we take this call? Should we take that call? So it will be coming to me. So when I say my opinion, my percentage matters for the voting. There will be voting for various decisions. Voting ಆಗ್ತದೆ. Voting ಆಗುವಾಗ shares ಲೆಕ್ಕದಲ್ಲಿ voting ಕನ್ಸಿಡರ್ ಮಾಡೋದು. ಮೆಂಬರ್ಸ್ ಲೆಕ್ಕದಲ್ಲ. ನನ್ನ ಹತ್ರ ಎಷ್ಟು ಶೇರ್ಸ್ ಉಂಟು ಕಂಪನಿದು ಅಷ್ಟು ವೇಟೇಜ್ ನಂಗೆ ಸಿಗ್ತದೆ. ಈಗ ನನ್ನ ಹತ್ರ ಎಷ್ಟು ಶೇರ್ಸ್ ಉಂಟು 800 shares ಉಂಟು ಔಟ್ ಆಫ್ 1,000 shares. So I have 80% of the company's ownership. ನನ್ನ ಹತ್ರ 80% ಉಂಟು company ownership. That is a very big number because there are two types of resolutions. Okay, one is ordinary resolution, and the other one is special resolution. The company will pass in general meetings. For this, we need more than 50%. For this, the cutoff is 75%. Special resolution is for some key things, key decisions of the company will be taken only after special resolution. So now 80% I have. That means I can, you know, just on my own without this person's help. ಈ person ಇದು ನಂಗೆ ಹೆಲ್ಪೇ ಬೇಡ. I can pass on my own special resolution ಕೂಡ ನಾನೇ ಪಾಸ್ ಮಾಡಬಹುದು ಬೇಕಿದ್ರೆ. ಆರ್ಡಿನರಿ ರೆಸಲ್ಯೂಷನ್ ಅಂತೂ ನಾನೇ ಮಾಡಬಹುದು, ಬಟ್ ಸ್ಪೆಷಲ್ ರೆಸಲ್ಯೂಷನ್ ಕೂಡ ಡೆಸಿಷನ್ಗೆ ನಾನು ಒಬ್ಬ ಸಾಕು ವೋಟ್ ಹಾಕಿದ್ರೆ. ಇನ್ನೊಂದು ಪರ್ಸನ್ ನಾವು ಎಷ್ಟೋ ಹೇಳ್ತಾನೆ ಡಸಂಟ್ ಮ್ಯಾಟರ್ ಓನ್ಲಿ ಬಿಕಾಸ್ ನನ್ನ ಹತ್ರ ಉಂಟು 80%. ಬಟ್ ದೆನ್ 75% ಐ ಹ್ಯಾವ್. ಸೊ ಐ ಆಮ್ ದ ಡಿಸಿಷನ್ ಮೇಕರ್. ಕಂಪನಿ ಉಂಟು, ಇನ್ನೊಬ್ಬ ಇದ್ದಾನೆ ಬಟ್ ಅವ ಮೈನಾರಿಟಿ ಶೇರ್ ಹೋಲ್ಡರ್. ಮೆಜಾರಿಟಿ ನನ್ನ ಹತ್ರ ಉಂಟು. So I can move the company the way I want. I have complete flexibility. It's my company only. 80% another round. Another 20% onto, but he can't do anything much with that 20%. So I have the final call. Even if he wants to take some decision, he can't with this 20%. I have to say yes for it. This 20% he can't do it. But now, if the company makes a new issue, right? So, hosa issue matter. Hosa issue matter. Let's say the company is issuing another 1,000 shares. As the company grows, they will want more money. So, authorized capital is the extra shares or issue matter. Authorized capital get 10,000 shares into one call. So, the 1,000 shares matra issue matter. So, the company will go ahead and issue another 1,000 shares. So, each 1,000 shares is outsiders bartara. This is given to outsiders, let's say venture capitalists, angel investors, ನೀವೆಲ್ಲ ನೋಡ್ತಿರಲ್ಲ, Shark Tank, this, that, and all. You see. So in that, outsiders and all angel investors and all will come in. They will buy 1,000 shares of my company. Now, after issue of fresh shares, how many shares will the company have issued? 2,000 shares the company would have issued. ಅದರಲ್ಲಿ ನನ್ನ ಹತ್ರ ಎಷ್ಟುಂಟು? I did not buy any new shares. I have only 800 shares, old to 800 only. My friend has the 200 shares that he had. And the new person has come with 1,000 shares. This could be public also, general public also, this could be. So now, how much percentage do I hold? I did not sell a single share. ಒಂದು share ಕೂಡ ಮಾರಲಿಲ್ಲ. But my percentage holding has come down now. It's come down to 800 divided by 2,000 into 100. What percentage do you get? 40%. I own only 40% now. This person will own 10%. This person or these people put together will own 50%. So now I can't even pass a ordinary resolution on my own because you need more than 50% votes to pass ordinary resolution. Now I have only 40% with me. So suddenly I become powerless, right? Although I did not sell a single share of my company, I am still sitting with 800 shares. But my percentage holding has come down. That means my voting power also has come down. My voting power has reduced significantly. So this is what happens when a fresh issue happens. This is the reason why if you see, you will say Mark Zuckerberg is the founder of Facebook. Okay, or you will say Bill Gates founded Microsoft. But if you actually go and look at their share capitals and shares, how much shares do they hold? Mark Zuckerberg holds in single digit percentage, 8%, 7% of Facebook. He probably did not sell a single share that he owns. Initially, how much shares he had got? Ashte shares or with bonus issue and all, it may be more today. But his percentage holding initially would have been some 80-90% because he co-founded the company. There were co-founders. But today the percentage holding has come down. The number of shares is probably same or more. But the percentage has come down. That's because the company has issued new shares to other people. Are you all understanding this? So this is how the percentage comes down. And as the percentage comes down, you lose control of the company completely. You won't have the control that you had initially. Our control irudilla ನಿಮ್ಮ ಹತ್ರ because ನಿಮ್ಮ voting power naturally reduce ಆಗ್ತದೆ. ಹೊಸ shares issue ಮಾಡುವಾಗ naturally reduce ಆಗ್ತದೆ. So this is what happens. Now, can we avoid this? To avoid this, you should tell the company don't issue only shares. Or if you're issuing, issue it to me only. But I might not have the money to buy the shares. No, company might need money, more money. I might have already invested a lot of money. I might not have that much money. That's why we go to the angel investors. That's why I go to Shark Tank. That's why I go to some other place to, tell people public issue martin and IPO martin because we need money from other people. So I don't have that much money. So what do we do? What is the solution for this? So this is where the concept of right issue comes in. So right issue or right entitlement anta kuda ಹೇಳ್ತೇವೆ ಇದಕ್ಕೆ. So what happens over here is right issue only. As per section 62 of the Companies Act, it is compulsory that first when you're going for issue of shares, first you have to offer those shares to your existing shareholders. So existing shareholders again, you first offer ಮಾಡಬೇಕು. And generally the company does this right issue at a discounted price. Discounted price means market price in the kadame, not less than the face value. Market price is the, let's say the shares market price. Let's take one company for example, Adarsh Limited. The market price of this company is let's say 210 rupees per share. Today, if I want to buy it in the market, it's 210. But this company is making a right issue. The company wants more money. So first, what the company will do is company will offer these additional shares, 1,000 shares. It is issued. So 1,000 shares anika avaru existing shareholders ಗೆ offer ಮಾಡ್ತಾರೆ. I and my friend. So I will get an offer for 800 shares. If I want to buy 800 more shares and 200 shares, my friend will get. He wants. This is known as right issue. And this can be at a lesser price than this. Market price is 210, but I may get it at, let's say, 150 per share. The offer might be, right offer might be at 150 per share. So the company is telling its existing shareholders, boss, I am in need of money, but before going to the outsiders, I will offer you the shares. You take the shares if you want. See, in the market, you will get it at 210, but I am going to offer it to you at only 150 per share. So 60 rupees saving ಆಗ್ತದೆ ನಿಮ್ಗೆ. So if you want, you can buy it, and the company will tell how many shares I can buy if I want. Sir, it's a good offer. No, you can buy it. No. I might want to buy it or I might not want to buy it. I might buy it if I have money, if I have interest in the business, if I feel 800 shares they're going to put up, then it's good if I take these 800 shares. If I think like that company has future, I might buy these additional shares. But I may also think that no, I already have enough shares in this company, or I don't have enough cash for this. ಇದಕ್ಕೀಗ ಹಣ ಇನ್ವೆಸ್ಟ್ ಮಾಡ್ಲಿಕ್ಕೆ ನನ್ನ ಹತ್ರ ಹಣ ಬೇಕಲ್ಲ, 800 into 150 rupees cash ಬೇಕು. ಅಷ್ಟು cash I don't have. So I might decline this offer. I might say I don't need it. But there is there's one small twist here. You don't have to decline it directly. What the company does is, company gives you something like tokens. Okay, I'm telling you in real world how it works. So right issue only when the right entitlement of the tokens put to the company. That token will come and sit in your demat account actually. So right entitlement like this. If I'm getting 800 right shares, I'll get 800 tokens like this. 800 tokens nange sigtada. Look at this, a little technical, pay attention. So I get 800 tokens like this. If I want, I can use these tokens and I can buy 800 shares at 150 per share. Now 150 per share ಗೆ ಈ 800 shares ಅನ್ನು buy ಮಾಡಬಹುದು. Have you understood so far? Have you all understood so far? ಇಲ್ಲಿ ತನಕ ಇಲ್ಲಿಗೆ ಅರ್ಥ ಆಗಿತ್ತಾ? What is the right issue? What is the right issue? Right issue is an issue made to the existing shareholders to buy the shares of the company at a discounted price. That's all. Right issue is an issue of shares to the existing shareholders. It is an offer. It is an offer. Right shares are the offer made to an existing shareholder to buy the shares of the company at a discounted price. That is what a right issue is. Is this clear? Have you all understood this? Okay. Now I'm telling you how it works. So the company will give me this right entitlement, like tokens ಬಂದು ನನ್ನ demat account ಅಲ್ಲಿ ಬೀಳ್ತದೆ. Now, let's say the right issue happened on what's the date today? Today is 6th March. So, okay, let's take for example 15th February. They gave me these tokens. Okay. On that date, I should have been, there is something called as the record date. So record date ಅಲ್ಲಿ ನಾನು ಅವರ books ಅಲ್ಲಿ shareholder ಇದ್ರೆ ನಂಗೆ ಅವರು tokens issue ಮಾಡ್ತಾರೆ. ಹೀಗೆ ನಂಗೆ tokens ಬಂದು ಬಿತ್ತು ನನ್ನ ಹತ್ರ. Now they are telling me, Adarsh, by 15th of February, I have eligibility to use these tokens and buy the shares of the company at 150 per share. ಬೇಕಿದ್ರೆ ನಾನು 150 into 800. 1,20,000 rupees company account ಅಲ್ಲಿ ಡೆಪಾಸಿಟ್ ಮಾಡಿ ಆ ಶೇರ್ಸ್ ಅನ್ನು ಬೈ ಮಾಡಬಹುದು. I can buy 800 more shares. Already ನನ್ನ ಹತ್ರ 800 ಶೇರ್ ಉಂಟು. Another 800 shares the company has offered to me. ಮಾರ್ಕೆಟ್ ಅಲ್ಲಿ ತಗೊಳ್ಳಿಕ್ಕೆ ಹೋದ್ರೆ they shares 210 into 800, 1,68,000 ಆಗ್ತದೆ. But the company is telling me, ನೀವು ಮುಂಚೆಯಿಂದ ನಮ್ಮ ಕಂಪನಿಯಲ್ಲಿ ಇನ್ವೆಸ್ಟರ್ ಆಗಿದ್ದೀರಿ, ಶೇರ್ ಹೋಲ್ಡರ್ ಆಗಿದ್ದೀರಿ, ಸೊ ನಿಮ್ಗೆ ನಾನು 60 rupees ಕಮ್ಮಿ ಕೊಡ್ತೇನೆ, ಡಿಸ್ಕೌಂಟಿಂಗ್ ಕೊಡ್ತೇನೆ, 150 ಕೊಡ್ತೇನೆ, ನೀವು 1,68,000 ಕೊಡ್ಬೇಕಂತ ಇಲ್ಲ. You have to pay me only 150 rupees into 800 shares. You pay me 1,20,000, 800 shares is yours. You can take it, you can go. So, but I should have these tokens with me. Tokens in the non-company ke kodtane. I will tell fine, take the tokens, take 150 rupees per share, take 1,20,000, give me the 800 shares, I will go. But now, what if I don't want to buy the shares? For some reason, I don't want to use these tokens and buy the shares at 150 rupees. Not interested. So what I can do is, I can actually sell these tokens. There's a market for these tokens. These tokens are nothing but it is known as a right. We call it as right entitlement in the real world, but in your textbook and all, you will see this is called as right. So there is a right, right? You can sell that right. What is this right entitlement? This is you have a right to buy the shares at 150 rupees. So you have a right. It's an exclusive right. Because you're an existing shareholder, you got this right. Everyone in the public did not get this right. So there might be some interested people who might want to buy the shares of the company. Now, let's say my neighbor is there who wanted to invest in Adarsh Limited. So he's thinking now, if I buy from the market, I will have to pay 210 rupees for it. But if I buy it, if I had a right, Adarsh has a right. I have a right now, right? I have a right, 150 rupees. But if any other public person wants to buy, he will have to pay 210 rupees and buy the shares. But if I want to buy, I can buy it at 150. So he will come to me, that neighbor of mine will come to me and asks, boss, you are not anyway going to buy the shares. So can you transfer those tokens? Because we have to have those tokens. No. So transfer those tokens to me. I will buy it for 150. For me, it will be a discount. No. If I go to the market and buy it, it will be 210 for me. But if I get those tokens, right, entitlement ಸಿಕ್ಕಿದ್ರೆ ನಂಗೆ, I will be eligible to buy it at 150 rupees only. So I enjoy a discount. Are you all understanding this? Are you all following this? So this is what happens. Now what I can, there's a market for this tokens now. You right entitlement ticket or this right ticket, there's a market for this. So I can sell this to my neighbor. I can tell him, boss, I will sell it to you. ನಾನು ಧರ್ಮಕ್ಕಂತೂ ಕೊಡುವುದಿಲ್ಲ ನಿಮಗೆ. I will sell it to you at a price. And that price is known as the value of right. Because I have this tokens with me, is right with me. I don't have the shares, neither are shares in law, but I have a right to buy the shares at a discounted price. So if I want, I can buy it at that discounted price, or I can renounce. It's known as renunciation. I can renounce the right. I can transfer the right in favor of another person for a consideration. I can renounce the right in favor of another person for consideration, for value. So I can transfer it to my neighbor for a value. What is the value? Can you guess how much I can sell it for maximum? How much can I sell this right for per share? Nano estak ಮಾಡಬಹುದು. I'm not selling the shares. I don't have the shares. I have the tokens to buy those shares. Remember, for your answer, don't say 150 rupees because I don't have the shares. I have the tokens to buy those shares at 150 rupees. My question is, if I can sell these tokens, at what maximum, what price can I sell these tokens for? What is the maximum price I can buy, sell these tokens for? How did you say 10? Are you all understanding the question? Are you all getting the question? 210 is the market price of the share. I'm not saying I'm selling the shares. ನಾನು shares ಮಾರ್ತಾ ಇಲ್ಲ. I am selling the right. I have some tokens. This is known as right. So I'm selling the token to buy the shares at 150 rupees. As the same person now, let's say I'm offering these tokens to you. Pradyumna, you can buy these shares at 150 rupees, man. In the market, it is available for 210. You can buy these shares for 150. How much will you pay? Will you pay 80 rupees? Will you pay 80 rupees to me and go buy for 150 rupees from the company? Does that make sense to you? You'll pay 80 rupees to me and you'll pay 150 rupees to the company. Is it worth it for you? The answer is no, because you will end up paying 230. In the market, you would have got it for 210. Are you all understanding what I'm saying? Have you understood the concept of the tokens and all of that? Did you pay attention when I discussed it? Okay, let me do this again. Okay. Will you buy it for say 70 rupees? I'll offer it to you for 70 rupees. You pay me 70 rupees and you will get, you will be eligible to buy the shares at 150. Will you go for it? I'll give it for 70 rupees tokens ನಿಂಗೆ ಕೊಡ್ತೇನೆ ನಿನ್ ಕಂಪನಿ ಹತ್ರ ಹೋಗಿ 150ಗೆ ಪರ್ಚೇಸ್ ಮಾಡ್ಬೋದು. Will you agree for this deal? 70 rupeesಗೆ ನಾನು ನಿಮ್ಗೆ ಟೋಕನ್ ಕೊಡ್ತೇನೆ ನೀವು ಕಂಪನಿ ಹತ್ರ ಹೋಗಿ 150ಗೆ ಬೈ ಮಾಡಿ. Will you agree for this deal? Again you will say no. Again you will say no. ಸರ್ ಮಾರ್ಕೆಟ್ ಅಲ್ಲಿ 210ಗೆ ಸಿಗ್ತಾ ಉಂಟು ಇಲ್ಲಿ ನಿಮ್ಗೆ ನಾನು 70 rupees ಕೊಡ್ಬೇಕು ಕಂಪನಿಗೆ 150 rupees ಕೊಡ್ಬೇಕು 220 rupees ಕೊಟ್ಟಾಗೆ ಆಗ್ತದೆ ಬರಲ್ಲ ನಂಗೆ. I will end up paying 10 rupees extra. So maximum you will say as of now, consider as of now, maximum you will be ready to pay is 60 rupees. Because 60 rupees nange kottiri, 150 rupees company ke kottiri, 210. No profit, no loss for it. You will always bargain for less than 60 rupees. You will say 55, 50, 45, something like that. You will bargain. Less than 60 you will bargain. Are you understanding what I am saying? You will always bargain for less than 60. So you might say 55, 50, 60, anything lesser than 60 looks profitable for you. But there is a twist in the tail. Some twist. Right issue ಆದ್ಮೇಲೆ you understood that logic, right? 60 ಎಲ್ಲಿಂದ ಬಂತು ಅಂತ ಗೊತ್ತಾಯ್ತಲ್ಲ ನಿಮ್ಗೆ 60 ಲಾಜಿಕ್ ಗೊತ್ತಾಯ್ತಲ್ಲ ಎಲ್ರಿಗೆ ಈ ಟೋಕನ್ಸ್ ನಾನೀಗ ಫಾರ್ ನಾವ್ ಆಸ್ ಪಾರ್ಟ್ ಆಫ್ ಅವರ್ ಡಿಸ್ಕಷನ್ ಫಾರ್ ನಾವ್ ಹ್ಯಾಸ್ ಎವ್ರಿವನ್ ಅಂಡರ್ಸ್ಟುಡ್ ದಿಸ್ ಈ ಟೋಕನ್ಸ್ ಅಂತ ರೈಟ್ ಎಂಟೈಟಲ್ಮೆಂಟ್ ಅಂತ ಇದೆಲ್ಲ ಅರ್ಥ ಆಗಿದ್ಯಾ ಎಲ್ರಿಗೆ ಹ್ಯಾವ್ ಯು ಆಲ್ ಅಂಡರ್ಸ್ಟುಡ್ ದಿಸ್ ಕ್ಯಾನ್ ಐ ಗೆಟ್ ಅ ಯೆಸ್ ಆನ್ ದ ಚಾಟ್ ಬಾಕ್ಸ್ ಪ್ಲೀಸ್ yes okay. So 60 rupees is the maximum you will be ready to pay where you will not make any profits or any losses. Because you will pay me 60, you will pay 150 to the company. So 210 will be the total amount you will end up paying, but less than 60 is what you prefer. But what if I tell you after the right issue, the shares will not be available for 210 theoretically, okay? It will not be available for 210. It will change. Now you have to think and tell me, you have to apply your economics sense and you have to tell me, what will be the market price of the company shares after right issue? Will it be more or will it be less? Right issue ಇಂದಾಗಿ ಮಾರ್ಕೆಟ್ ಪ್ರೈಸ್ ಯಾವ ದಿಕ್ಕಲ್ಲಿ ಹೋಗ್ತದೆ 210 ಇದ್ದದ್ದು ಜಾಸ್ತಿ ಆಗ್ತದೆ ಕಡಿಮೆ ಆಗ್ತದ ಮಾರ್ಕೆಟ್ ಪ್ರೈಸ್ will it be 220 or will it be lesser than that? How does it go after right issue? What do you think? Now, let's say, for example, when I was younger, we used to, there was, craze for Beyblades. I don't know if you have ever seen a Beyblade. So Beyblades and the we used to have these contests, it's like a top. So you just bugri you call it, something like that. So we used to have like contests, betting and all we used to do when we were in school, fourth, fifth standard. So there was a lot of craze for Beyblades. So there was one shop right in front of our school who used to sell Beyblades for 150 rupees, 120 rupees, or something like that. Basic, it starts from let's say 120 rupees. Marta is on the Beyblade. Nice quality, 120 rupees. So after some time, we realized that there was another shop a little forward from our school who used to sell the same thing for 80 rupees. Ade Beyblade, ade brand, ade quality, ade color. I would get it for 80 rupees somewhere. So there is a disruption in the market price. 120 ಒಬ್ಬ ಮಾರ್ತಾ ಇದ್ದಾನೆ, ಇನ್ನೊಬ್ಬ 80 ಮಾರ್ಲಿಕ್ಕೆ ಸ್ಟಾರ್ಟ್ ಮಾಡಿದ್ದ. So what will happen to the market price? Will it go down? The general market price now that 120 ಗೆ ಮಾರ್ತಾ ಇದ್ದಲ್ಲ ಒಬ್ಬ, will he have to reduce his price or will he increase his price? Will he increase it more? He will have to reduce the price. Market works like that only. No, if you're selling it for 120, who will buy it for 120 when the market price there is 80 rupees? It's lesser. So obviously we will have to find a middle ground somewhere. You might not have so much stock also, 80 rupees in your market to stock it like killer, but both of them will start selling it for 90, 95, 100. Somewhere the middle ground will come. So the price will reduce. The same thing happens with right issue also. So market price right now is 210, but someone is selling it for 150 rupees. The company directly is selling it for 150 rupees. So market price after the right issue will not be 210. It will not be more. It will be less because you have suddenly released some shares at a lesser price in the market. So 150 can you release ಮಾಡಿದ್ದೀರಿ shares ಅನ್ನು. So people will start selling it for 190, 180, 170, 200 reduce market. So basically someone else is selling it for a lesser price. 150 ಗೆ ಸಿಕ್ಕಿದೆ ಅವರಿಗೆ. So ಅವ ಸೇಲ್ ಮಾಡುವಾಗ ಅವ ಕಮ್ಮಿಗೆ ಸೇಲ್ ಮಾಡ್ತಾನೆ. So the market will go down. The market price will go down. Did you understand the logic? So 210 ಗೆ right mark ಈಗ current now the market price is 210. But right issue ಗೆ ನಂಗೆ ಈಗ 800 shares ನಾನು ಪರ್ಚೇಸ್ ಮಾಡಿದ್ದೇನೆ ಅನ್ಕೊಳ್ಳಿ 150 ಗೆ ನಾನು ಇಮಿಡಿಯೇಟ್ಲಿ ಸೇಲ್ ಮಾಡ್ತೇನೆ. ನಾನು ಸೇಲ್ ಮಾಡುವಾಗ 210 ಗೆ ಎಲ್ಲರೂ ಸೇಲ್ ಮಾಡ್ತಾ ಇದ್ದಾರೆ. So I will not sell it for 210. I want to sell my shares quickly. So I will sell it at 205, 200, 195. I'll find a buyer sooner, right? So I will sell it for a lesser price. So because of which, even the person who's selling it at 210 will have to adjust to my price. He will have to come down. He will have to find a middle ground. So that is why the market price reduces. It doesn't increase. After right issue, it reduces. Because suddenly there are shares at a lesser price in the market. So that is what happens after issue of right shares. So we try to calculate what could be the what could be the market price after the issue. That is known as X right price. I think formula unto. We do it in theory. So it's not really ಹೀಗೆ ಆಗ್ತದೆ ಅಂತ ನನ್ನ ಫಾರ್ಮುಲಾ ಪ್ರಕಾರವೇ ಅಷ್ಟೇ ಪ್ರೈಸ್ ಇರ್ತದೆ ಅಂತ ಗ್ಯಾರಂಟಿ ಮಾಡ್ಲಿಕ್ಕೆ ಆಗುದಿಲ್ಲ ಬಿಕಾಸ್ ಮಾರ್ಕೆಟ್ಸ್ ವರ್ಕ್ ಡಿಫ್ರೆಂಟ್ಲಿ ರೈಟ್ ಇದು ಮಾತ್ರ ಅಲ್ಲ ಬೇರೆ ಎಲ್ಲ ಇಮೋಷನ್ಸ್ ಇರ್ತದೆ ಸೊ ವಿ ಕಾಲ್ ದಿಸ್ ಇಸ್ ಥಿಯೋರಿಟಿಕಲ್ X right price. I'll tell you how to calculate this. So we'll discuss all of this one by one. But for that, first we'll write some notes. Meaning of right issue. Right issue means offering shares to existing members in proportion to their existing shareholding. The object is to ensure equitable distribution of shares, and the proportion of voting rights is not affected by issue of shares. So you can take all of this down. Section 62(1)(a) of the Companies Act provides for the right issue by a company. The distinguishing feature of a right issue is that it is made only to the existing shareholders of the company. The existing shareholders have a right to subscribe any fresh issue of shares by the company in proportion to the existing. Renounce this right. Renounce means transfer it to the neighbor, transfer it to someone for a price. That is known as renunciation. And third one is rejected. Reject it completely. But reject ಮಾಡೋಕ್ಕಿಂತ renounce ಮಾಡೋದು better because you get some consideration, right? ಆ ಇಂಟರ್ನೆಟ್ ಶೇರ್ ನಾನು ಪರ್ಚೇಸ್ ಮಾಡ್ಬೋದು ಈಗ ಅವ್ರು ನನ್ನ ನೇಬರಿಗೆ ಹೇಳ್ಬೋದು ಯು ಕ್ಯಾನ್ ಬೈ ಫ್ರಮ್ ಮೀ ಆ ರೈಟ್ ಟೋಕನ್ಸ್ ಅನ್ನು ನಾನು ನಿಂಗೆ ಟ್ರಾನ್ಸ್ಫರ್ ಮಾಡ್ತೀನಿ ಆ ಟೋಕನ್ಗೆ ನಂಗೆ ಹಣ ಕೊಡು ಅಂತ ಹೇಳ್ಬೋದು ಇಲ್ಲ ನಾನು ಟೋಕನ್ ತೆಗೆದು ಬಿಸಾಡಿ ಬಿಡ್ಬೋದು ಬಟ್ ದಟ್ ಇಸ್ ನಾಟ್ ಅ ರಿಯಲಿ ಸೇನ್ ಆಪ್ಷನ್ ಟು ಜಸ್ಟ್ ಥ್ರೋ ದ ಟೋಕನ್ಸ್ ಆಫ್ without using it, without selling it, you're wasting an opportunity. So the best thing is either buy it. If you don't buy it, use the tokens, give it to someone else. Sell it to someone else who can use the tokens. So that is how the options I have. Generally, option one or two is better. Are we done? Are we done? Can I continue? Yes. Okay, now so value of the right. How to calculate this? So as I told you, what happens to this after the right issue? This price goes up or does it come down? What happens to the price, the market price? 210 before right issue. After right issue, will it be more or will it be less? What will it be after right issue? As I told you earlier, it will be lesser, right? Because in the market, we would have infused some shares which have been sold for a lesser price. So obviously, the market will also, adjust to that price and it will become lesser. So E 210 it will become lesser because there are cheap shares in the market now, shares which were issued by the company itself for a lesser price. So it will be the market price will obviously be lesser than this. So when that neighbor bargains with me, the neighbor will not take 210 as the basis. The neighbor will try to calculate how much could be the market price after the right issue. So let's say it will become 206 for our understanding. And ಹೇಗೆ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡೋದು ಹೇಳ್ತೇನೆ 206 ಆಗ್ತದೆ ಅಂತ ಅವ ಹೇಗೆ ಇಂತ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಿದಾನೆ ರೈಟ್ ಇಶ್ಯೂ ಆದ್ಮೇಲೆ 206 ಆಗ್ತದೆ ಸೊ ನಿನ್ಗೆ ಈಗ 150ಗೆ ಸಿಗ್ತಾ ಉಂಟು ಸೊ ಮ್ಯಾಕ್ಸಿಮಮ್ ಹೌ ಮಚ್ ವಿಲ್ ಈ ಬಿ ರೆಡಿ ಟು ಪೇ ಮೀ ನಾಟ್ 60 ನಾವು 60 ಅಲ್ಲ ಬಿಕಾಸ್ ರೈಟ್ ಇಶ್ಯೂ ಆದ್ಮೇಲೆ ಕಮ್ಮಿಗೆ ಸಿಗ್ತದೆ ಮಾರ್ಕೆಟ್ ಅಲ್ಲಿ ಸೊ ಹೌ ಮಚ್ ವಿಲ್ ಹಿ ಬಿ ರೆಡಿ ಟು ಪೇ ಮೀ ಫಾರ್ ದ ಟೋಕನ್ಸ್ ಗೆ ಎಷ್ಟು ಕೊಡ್ಲಿಕ್ಕೆ ರೆಡಿ ಆಗ್ತಾನ ನಾವ value of right, a right entitlement, tokens where you get a right to buy the shares at 150. He will be ready to pay a maximum of 56 rupees now, not 60, 56 rupees. Then maximum 56. So he'll try to bargain it. If he needs a profit, he'll have to bargain it for a lesser amount, but maximum 56 rupees. I hope everyone has understood this because let's say if he buys it for 55 from me, if he buys for 60 from me, 60 ಗೆ ನನ್ನ ಹತ್ರ ಟೋಕನ್ಸ್ ತಗೊಂಡಾವ ಅಲ್ಲಿ ಕಂಪನಿಗೆ ಹೋಗಿ 150 rupees ಕೊಟ್ಟ ಸೊ 150 ಕಂಪನಿಗೆ 60 ನಂಗೆ 210 ಕೊಟ್ಟ ರೈಟ್ ಶೇರ್ಸ್ ಬಂತು ಇಮಿಡಿಯೇಟ್ಲಿ ಮಾರ್ಕೆಟ್ ಪ್ರೈಸ್ ಇಸ್ ಫಾಲನ್ ಡೌನ್ ಫ್ರಮ್ 210 to 206 so he will say why did I pay 60 loss ಆಯ್ತಲ್ಲ ನಂಗೆ so he will not be ready to pay 60 rupees to me he will say he will try to calculate how much will be the market price after the right issue. So if he's feeling this is known as theoretical expired price, real price is not calculatable. It is actually a ನೋಡಬೇಕು. But 206 into the ಲೆಕ್ಕಾಚಾರ ಹಾಕಿ ಯಾವ 206 ಅಂತ ಹೇಳಿದಾಗ so 206 minus 150 so maximum 56 ಕೊಡ್ಲಿಕ್ಕೆ ರೆಡಿ ಆಗ್ತಾನವ so 56 ನಂಗೆ ಕೊಟ್ರೆ 150 ಅಲ್ಲಿ ಕೊಟ್ರೆ 206 market price ಕೊಡೋದ್ರ ನಂತರ ಅವನ ಪ್ರಕಾರ 206 ಇರ್ತದೆ. If he gets it for less than 56, then good for him. If he gets it for, let's say, 40 rupees from me, ನಂಗೆ 40 ರೂಪಾಯಿ ಕೊಟ್ಟ ಅವ ಟೋಕನ್ ತಗೊಂಡ ಕಂಪನಿಗೆ 150 ಕೊಟ್ಟ 190ಗೆ ಬಂದಾಗೆ ಆಯ್ತು ಅವನಿಗೆ ಶೇರ್ಸ್. So it is good for him. Anything less than 56 is reasonable for him. More than 56 is not good if the market price is going to be 206 after the right issue. If the market price is 206 after the right issue. I hope everyone has understood. So value of right is nothing but now some important terminologies over here. Come right value of share minus x right value of share. This is the value of right. So this is nothing but I will tell you what are these different terminologies also. Come right price is nothing but cumulative right value of share. So this means this is the price before the right issue. It has a right inside it. So that is known as, that's why we call it as cumulative right value of share. X right value of share means after the issue, how much would be the price we calculate. So this is after. So just take this down now with numbers. I will discuss with you how this works. Just take this down for now. So this is a value for right. Before the issue, what was the value of the share? Then we minus with after the issue, what is the value of the share? That is known as value of right per share. I hope we are done. Okay. Now, the before price is available readily. We will get the before price. The theoretical exit price, that is after the right issue, how much will be the value, how to calculate that. It's a very simple formula. So theoretical exit price, we also call it a store. Just understand all of this and then I will tell you ultimately how all of this works. So theoretical exit price, it's very simple. So let's say now, for example, we have 210 rupees in the market. We have 1 lakh shares right now, or 1000 for easy calculation. 1000 shares into total market. The company has issued 100,000 shares. The market price is 210. So what will be the value of the company before the market? Right issue ಮಾಡೋ ಮುಂಚೆ ಎಷ್ಟಿರ್ತದೆ value ಅದ್ರದ್ದು 210 per share. There are 1,000 pieces of the company, shares of the company. So the total market value of the company is 210,000 is the total value of the company. Now they're issuing some shares for 150 rupees. Let's say they're issuing some 200 shares in the ratio of 1:5. So if you have 1,000 shares, you'll get 200 shares. So 200 shares issue down to only. So what is the new cash flow the company is generating? Is to cash flow is to 150 into 200. 30,000. So the total value of the company is 2,40,000. How did we calculate the value of the company? Earlier it was valued at 2,10,000. 210 into 1,000 shares. 2,10,000 was the value of the company before the right issue. So it is 2,10,000. Now 30,000 rupees the company is getting. So there is a asset coming in for 30,000. Cash is coming 30,000. So what is the total value of the company? After right issue, what is the total value of the company? The total value of the company is 2,40,000. 2,40,000 is the amount. So what am I trying to calculate? I am trying to calculate the value of the company after the right. After the right. X right means after the right. So after the right, what would be the value of the company? It will be 2,40,000. So 2,40,000 is the value per share. Calculate ಮಾಡಬೇಕು ಅಂತ ಹೇಳಿದ್ರೆ you have to divide it by number of shares. How many shares will the company have? 1,000 shares was already there. We are issuing 200 more shares. So how much will it be? 1,000 plus 200. So 1,200. So what will be the new value per share of the company? It will be 2,40,000 divided by 100, 1,200. It will be 200. Simple calculation we did, simple math, basic math we did. We did not apply any complex formulas over here. We said before the right issue, it was 2,10,000, 30,000 rupees worth the company gave. So total value of the company is 2,40,000 now. And the company has right now per share we need the value per share. So the company has 1,200 shares after right issue. So divided by 1,200 per share will be 200 over. So that's all we did. So this is known as theoretical extract price, or the price that is possible. Theoretically calculate ಮಾಡಿದ್ದು. This is not accurate. So this was calculated theoretically. So 200 is the estimated price of the company after the issue of shares. So right issue of shares. Now this calculation can be simplified. I might not know how many shares the company has outstanding extra shares into company ಅದೆಲ್ಲ ನನಗೆ ಗೊತ್ತಾಗ್ಲಿಕ್ಕಿಲ್ಲ. So see what I did was this. No, I had applied this formula. So here what we can do is, instead of taking this detailed formula, what we generally do is, if I know the right issue with the proportion. What was the proportion over here? It was 200 shares for 1,000. That is nothing but I would get one share if I had five shares. So the proportion is 1:5. If you simplify, you get 1:5, right? So what we do is we don't take the whole number of shares. We just take the ratio. So here we multiply 1,000 and 200. Instead of this, we'll just take 5 over here. I'm substituting 1,000 with 5 and this with 1, and here also 5 and 1. So your answer will be the same. You can take any multiple of 5 and you can do it. Your answer will be the same. So 210 into 5, that will be 1,050 less 150 into 1, 150 divided by 5 plus 1, 6. So 1,050 plus 150 divided by 6. So your answer will be 200. So generally what we do to calculate TORP is we don't take the total number of shares because that data might not be available to us because you might have to check again and all. So if you have the right, whatever the right ratio. So right issue with the ratio number issue ratio ನಾನು 5 is the number of shares before. Now you're getting one more share. So 5 became 1. So 5 plus 1 here we do, and then here we get the total calculation. The answer will be same because we've taken the divisible. So this is the formula to calculate TERP. I hope you have understood what is extract price. Extract price is the price of the share after the right issue, right? After. So this is how you calculate it. Extract value per share is equal to come right value. Come right value means value before the right issue. So which was 210 in our example. Number of shares before right issue. Again, you don't have to take the number of shares, you can take the ratio. If it's 1:5, it's 5. If it's 1:4, it's 4. If it's 1:10, it's 10. So you take the ratio into right price per share into number of right shares. So whatever the right issue price is, in our example, it was 150 into right number of right shares. So in our example, it was 200, or you can also take 1 divided by number of shares before right issue, which is 5 plus 1, number of right shares is 1. So the formula. You can take total shares also, you can take the ratio also, you get the same answer. Take this down, please. Are we done? Can I move on? So what is the value of right? What formula you had written earlier? Value of right in our example now. What is the come right price? I'll just explain through this only. Come right value was how much per share? It was 210. And X right value, how much did we get? Now we calculated, no? How much was the X right value I got? X right value was 200. So what is the value of right over here? The value of right is 210 minus 200. It is 10 rupees is known as value of right. Okay. It is not the value of right shares. The value of right maximum value that I can pay is how much? So value of right in the head of the Rika, 210 was the 210 minus 200. Okay, 210 minus 200. So it is 10 rupees is what I can pay per ride. So how this is calculated? Maximum price is to ಕೊಡ್ಬೋದು ಅಂತ ಹೇಳಿದ್ದು ನಾವು. How much is the maximum price in this context? Can you tell me? After the right issue, it is going to be 200. You will get it for 150 rupees. Right share ಸಿಗ್ತದೆ ನಿಮಗೆ 150 ಗೆ. After right issue, it will be 200. So how much maximum I can pay? Maximum ನಾನು ಎಷ್ಟು ಕೊಡ್ಬೋದು? Maximum I can pay 50 rupees, right? Maximum. So that is calculated. Uh, 200 rupees is the X right price. Right price is 150. So 200 minus 150, 50 per share, per right I can pay. ಇದು value of right per share. For this, we have to divide it by 5 because we get one right for 5 shares. 5 shares ಇದ್ರೆ ನಮಗೆ ಒಂದು right ಸಿಗ್ತದೆ. There's some other discussion. I will tell you when we discuss the numbers. But for now, remember the formulas in your textbook itself. I will give you the context when we discuss the questions. I will give you more clarity relating to that. Now we have a nice question over here. Question number 6. Again, this is there in your textbook. You will have to find out and tell me which uh, question number this is in your ICAI material. A company offers new shares of 100 each at 25% to the existing shareholders on one share for 4 basis. The come right price of a share is 150. Come right means before, right? Before the right issue, the price is 150. Calculate the value of a right. What should be the X right market price of a share? Okay. A very simple question. A company offers new shares of rupees 100 each at 25% premium to the existing shareholders. So there is a right issue. 100 rupees is the face value of the share. This is illustration 5 in your textbook. Okay, so 100 rupees is the face value, 25% premium. So what is the right price? Right price is Tordo. The right price is 125. Okay. What is the market price of these shares? The market price is 150. Now they have asked us to calculate the value of a right and what should be the X right price of this share. Very simple. Let's calculate theoretical X right price first. Theoretical X right price is equal to number of shares before right issue into cumulative price. Come right price. You can write it as come right price. Come right price plus. This was the old value of the company plus. We created some cash flows now. How much cash flows have I created? Number of right shares into right price. This is the additional value that the company has created. So the value of the company goes up. This will be the total value of the company divided by, we have to calculate per share, right? So for that, number of shares before right issue plus number of right shares. So you will get per share value when you do this. So now they have not given this question, total right shares to company, they have just given the proportion, the current proportion. So on 1-for-4 basis, what does this mean? So if you will get one share if you hold four shares. So total number of shares you can consider before right issue was four. Four shares multiple of four. It could be 4,000, 1,000, 5,000, multiple of four. So 4 into what is the come right price? Have they given the come right price? The come right price is 150. It's already given in the question. So the value of the company before was this much, 150 into 4. We are taking on the basis of the proportion itself. We don't know the total shares. Plus number of right shares is 1. Right price is 125. How did I get the right price? 100 rupees is the face value of the company. It is being issued at a premium of 25%. So 125 was the right price. Number of shares before right issue is 4. And number of right shares is 1. So the answer will be 4 into 150. 600 plus 125 divided by 5. This is the estimated theoretical X right price. Estimated price of the share after the issue. After the issue, I am expecting the price to be 145 rupees per share. So value of right is calculated like this. Cumulative or come right price minus X right price. How much is the come right price of the company shares? 150. Now it's 145 X right price. So 5 rupees is the value per share of the right per share. When the token is the value 5 rupees per share. Our token ಸಿಗೋದು ನಮಗೆ 4 share ಇದ್ರೆ ಒಂದು token ಸಿಗೋದು. So per share it is 5 rupees. Value of right per share it's you have a token. So I'm not telling you the value of that token. I'm telling you the value of that token per share that you have. Now you got the token because you had 4 shares. One token you got because you had 4 shares. So the maximum price at which you can sell one token is not 5 rupees. It is because this is value of the token per share. You got that one token because you had 4 shares. The right issue ratio is 1:4. Are you understanding? Are you following? So you got the token because you had 4 shares. One token will be available if you have 4 shares. What is that token? The right entitlement. So you will get it if you have 4 shares with you. Okay. So now this is the value of the token divided by 4. So this is the value of right per share. This is what the institute expects. Is to now answer this much is enough. But the maximum price is not 5 rupees at which you can sell. The maximum price is 5 into 4, which is 20 rupees. You can also calculate it. X right price is 145. The market price after the right issue is going to be 145. We are going to get it for 125, the right price. So any sane person will be ready to pay 20 rupees maximum to us, 20 rupees. The right calculation, I mean, the exit price value of right and all is very easy to understand. I hope everyone has followed the formulas. Very, very simple it is. Can we do this? Can you try question number 7 on your own? This is also there in your ICA material. I think it's practice question. Can you try this on your own quickly now? Whoever gets this answer right, you will get a chance to host me for dinner. I will come to your home to dinner, CC. You're getting a chance to host me for a dinner. I basically get free food. Anyway, reward. Anyway, so यार ये reward is exactly. Yeah, yeah. Let's see. Whoever gets this right, the reward is I will come to your home for dinner. Not today, someday. If it's in Bangalore, today only. So you have to calculate the value of the right and you have to calculate the theoretical exercise price. This is practical question 4. Don't look at the solution in the question textbook. Just answer from here only now. I want to know the value of a right and the toe. Okay. We got the answer from Deepak and Gaurav. Anyone else? Just two people? Deepak, where's your home, man? I'm coming on my way for dinner. Yes. Anyone else wants to answer it? Okay, what have they said? A company has decided to increase its existing share capital by making right issue towards existing shareholders. The company is offering one new share for every two shares held by the shareholder. So the market value of the share is 240 and the company is offering one share for 120. Complete the value of a right. What should be the exit market price of the share? Okay. So exit market price we calculate first 240. Oh, Deepak, I'm on my way. 240 into 2, so 480 plus 120 into 1, so that's 120, 600 divided by number of shares after the issue, that will be 3, 2 plus 1, right? So 3, 200. 200 is the term. Theoretical exercise price is 200, and the value of the writer is 240 minus 200, 40 rupees. Very simple. Is this understood? Have you all followed this? So it's 2 into 240 plus 1 into 120. 1 second. 1 into 120 divided by 3 shares. Which is going to be 200 rupees per share, and value of writers come right price minus exit price, which is 240 minus 200, which is 40 rupees. Done. That's all. That is our solution for that question. Very simple. You can also expect it in your exams. Is it not easy? Now, even easier is when to record the entries, entry record ಮಾಡ್ಲಿಕ್ಕೆ ಎಂತ ಇಲ್ಲ right issue ಅಲ್ಲಿ just share the ಹಣ ಬರೋದು capital ಗೆ ಹಾಕುದು ಅದಕ್ಕೆ ಬೇರೆ ಎಂತ entry ಇಲ್ಲ. So A limited, I'll just discuss one question. We'll close it there. A limited company, a limited company having shared capital of 25,000 equity shares of rupees 10 each decides to issue. Did you all understand the previous question? Did you all get the answer, or should I solve it? So it's 2 into 240. Number of shares before the right issue is 2. 240 is the come right price. Plus 1 into 120. Why am I not seeing more answers in the chat box? Where are you guys? Are you all listening? 2 plus 1. Are you all understanding? So 200 per share is the X right price. And value of writers come right price minus X right price, which is 40 rupees. Okay. Now the journal entry for right issue, simple like any other issue of shares. This is practical question 5 in your ICA material. A limited company having share capital of 25,000 equity shares of 10 each decides to issue right shares in the ratio of 1 for every 4 shares at par value. Assuming all the shareholders accepted the right issue and all the money was duly received, pass the journal entries in the books of the company. Very easy. So, how many shares do they have right now? 25,000 equity shares of 10 each. So, they are going for a right issue where they're offering 1 for 4 shares. So, 25,000 into 1 divided by 4. So, total how many shares are they issuing? If you hold 4 shares, you'll get 1. So you're holding 25,000 shares in all. So how much will you get? You will get 6,250. 6,250 shares. We have to write the entry. Very simple. Draw a small format for journal entry and start. First, you receive the money. Bank account debit. 6,250 shares into 10 rupees is the issue price. 62,500. 2, you can directly credit the share capital, or you can say share application, equity share application, and allotment account. In some of the answers you will find they have directly credited the share capital account also, which is not wrong. $62,500 being money on right shares received. This has been issued at face value, so transfer it to the share capital account. Equity, share application. There is no premium here. If you had collected some premium, it would be credited to the premium account, but now directly. Only one stage, there is no application allotment stage, separate allot. So everything is being collected at one stage only. That's why I have opened application and allotment account. Transfer this directly to the share capital as there is no security premium involved here. Done. That's it. Being application and allotment money transferred to share capital. That's it. So simple. Is it done? Then I go to the last question and we are done with this chapter. Question number 9. This is also there in your ICA textbook. You have to tell me the question. I think it's practice question or last one. The practice question or the illustration question. The following notes pertain to the balance sheet of Mars Company Limited as of 31st March 2023. Authorized capital is 50,000, 12% preference shares of rupees 10 each, 5 lakhs, 5 lakh equity shares of 10 each, 50 lakhs. Issued and subscribed capital is 50,000, 12% preference shares of rupees 10 each, fully paid 5 lakhs, 4 lakh equity shares of 10 each, 8 paid up, 32 lakhs. So we partly paid up shares. This is practical question 6 from your ICA textbook. Reserves and surplus, we have general reserve, capital redemption reserve, security premium, evaluation reserve, which is useless. Then we have profit and loss account, 16 lakhs. On 1st April 2023, the company has made the final call at 2 each. So final call was pending, no? So they have made it. On 4 lakh equity shares, the call money was received. So it was for cash, no bonus call. By 25th April 2022. Thereafter, the company, okay, it should be 23 over here. Thereafter, the company thereafter on the 1st May 2023, the company decided to capitalize its reserves by way of bonus at the rate of 1 share for every 4 shares held. It decided there that there should be minimum reduction in the free reserves. Okay. On 1st June 2023, the company issued right shares at the rate of 2 shares for every 5 shares, and on the date at issue price of 12 per share, all the right shares were accepted by the existing shareholders and the money was duly received on 28 June 2023. Very simple question, but it has both bonus issue and right issue. So let's do it. Now, first, we will have to do a working note to calculate how much amount of bonus we will need for the reserves in the strategy before the calculate madlike. So calculation of working note 1. Calculation of amount of bonus. Calculation of amount of bonus issue. Number of bonus shares. So we have how many bonus shares am I issuing? What, how many number of shares we have before? We have 4 lakh equity shares, and then we are going to issue capitalize its reserves by way of 1 share for every 4 shares held. 4 lakh into 1 by 4, 1 lakh shares. Amount of bonus issue will be multiplied with the face value. One lakh into piece 10. 10 lakh into reserve break banange. Now one more calculation, one more working note we will have to see what is required. Do we have to change the authorized capital? Authorized capital ನಾನು change ಮಾಡಬೇಕಾ? We have to change the authorized capital. The authorized capital right now is 5 lakh shares. I have already issued 4 lakh shares, so I'm issuing another 1 lakh shares. So it will be 5 lakh shares. So for the bonus issue, I don't have to change the authorized capital, but we are also going to do a right issue after this. So right issue ಮಾಡಬೇಕು ಅಂತ ಹೇಳಿದ್ರೆ authorized capital change ಮಾಡಬೇಕಾಗ್ತದೆ. How much right issue ಮಾಡ್ತಾ ಇದ್ದೀನಿ ನಾನು? The company issued right shares at the rate of 2 shares for every 5 shares held. So 5 lakh shares will be outstanding into 2 by 5 marking. So it will be 2 lakh more shares I want to issue, right? So I'll have to change the authorized capital as well. I don't have to show that working note because balance sheet is not required. So balance sheet la question only. That's why I don't have to show that working note. But I hope you understood that. I will have to change the authorized capital because the number of shares outstanding after the bonus issue and right issue will be more than 5 lakhs. So after the bonus issue, it will be 5 lakh only as 4 lakh again 5 lakh, 1 lakh add ಮಾಡ್ತೇನೆ ನಾನು bonus shares 5 lakh ಆಗ್ತದೆ. But other than the right issue ಮಾಡ್ತಾ ಇದ್ದೇನೆ. The right issue the proportion is 2 shares for every 5 held. And then ನಾನು multiply 5 lakh by 2 by 5. So you get 2 lakh right issue shares ಆಗ್ತದೆ. Total 5 lakh plus 2 lakhs, the answer is 7 lakhs. So 7 lakh shares outstanding after the right issue. Therefore, we will have to increase authorized capital. But here I am not going to show all of that because they have not asked me the balance sheet. They have asked me only the journal entries. So journal entries ಗೆ authorized capital increase ಮಾಡೋದು journal entry ಇಲ್ಲ. So ಅದಕ್ಕೋಸ್ಕರ ನಾನು ಎಂತ ಪಾಸ್ ಮಾಡೋದಿಲ್ಲ. I hope you have understood the discussion. Working note now ಬರೆಯುವುದಿಲ್ಲ. Now just pause the journal entries quickly. So right issue I need 10 lakh rupees, right? 10 lakh rupees ಎಲ್ಲಿ ತರುವುದು? Before that first 2 rupees collect ಮಾಡ್ಲಿಕ್ಕೆ ಉಂಟಲ್ಲ 2 rupees collect ಮಾಡಿ equity share final call account debit. ₹2 into 4 lakh shares, 8 lakh rupees to equity share capital. Equity share capital 8 lakh rupees. This is the due entry for the share final call money. The final call money due. Receive the money. Next, bonus issue ಮಾಡುವ bonus issue ಗೆ 10 ಲಕ್ಷ ಬೇಕು as per working note 1. So 10 ಲಕ್ಷ ಎಲ್ಲಿಂದ ತೆಗೆಯುವ? CRR first, 2,40,000. So 10 lakhs we need. For bonus issue, I need 10 lakh, right? CRR we have 2,40,000. Fine, sir. Next, security premium 2,75,000. Fine, sir. Then revaluation reserve law. Then I have a general reserve or P&L in the general reserve in the 1,60,000 take it in. Then remaining 3,20,000 and 3,25,000 I'll take from the P&L account. So the journal entry will be CRR account debit, securities premium account debit, general reserve account debit, P&L account debit, to bonus to shareholders. Ten lakhs, 3,25,000, 2,75,000, 2,40,000, 1,60,000. Is the order correct or have I missed something? 160? Oh no. 240, 275, 160, 240, 275, 160. 40, 75, 160. Correct. No, being bonus. In the ratio of what? In what ratio have we announced it? In the ratio of 1:4. The ratio of 1:4. Then pass the entry for issue bonus to shareholders account debit to equity share capital. Being bonus share issue. Done. That's it. We have a right issue also here. How many right shares am I issuing? Total 5 lakh shares. They have said the ratio is 2:5. We have 5 lakh shares. After bonus issue with the shares, they go like. So we are going to issue 2 lakh shares now. So for that, receive the money, bank account, debit. We are receiving 12 rupee per share, multiply it by 2 lakh shares. So it will be 24 lakhs. 12 rupees is the issue price, no? Right issue price. Issue price of 12 per share. Oh, you could write the dates also. I'm not writing the dates. You can write the dates. What are the dates? Uh, bonus issue date is, however, that call date is 1/4/23. Then this is 25/4/23. Then bonus issue is happening on 1st June. 1/6/23. This also 1/6/23. This is happening on July now. Sorry, bonus issue is on 1/5. Bonus issue is on 1/5. This is on right issue is on 1/6. All the rights were accepted by the existing shareholders and money was duly received on 28th June. So I'm going to write 28th June, not 1/6, 28th June, but because money is being received on that date. So bank account debit 24 lakhs to, I can directly credit the equity share capital and security premium. So I'll do that here. I'll not write two entries. I'm going to write directly. Or you can also do the two entries. One entry is to equity share application and allotment account. The next entry will be transferred to the capital and premium. This premium here, because the face value is only 10. So 2 rupees premium is being collected. So this is 10 into 2 lakhs, 20 lakhs, and this is 2 into 2 lakhs, which is 4 lakhs. I hope everyone has followed what I have told. Both the answers are acceptable as per the institute. Being right shares issued at a premium of 2 rupees. So directly I wrote the entry, I transferred it to share capital and security premium right away. Okay, that's it. That's the end of this chapter, bonus issue and right issue. I hope all of you have understood this. How prominent it is for our exams? Definitely one question. I do expect for 5 marks or 10 marks, especially from bonus issue. This question could come, which has just a small entry for bonus right issue. So it's doable, very easy chapter. There's nothing to panic. There's nothing to worry about it, as we saw. You can solve the whole institute material. We've solved majority of the questions of the ICA material now. Now you can sit and solve the rest of the questions. Probably few questions are left, but it is easy. You can do it. And once you finish it, do it today only. Sit and finish it off. You're done with one of the added chapters. Bonus issue, right issue, done. Similarly, we have the other two units in this chapter, which is redemption of preference shares and redemption of debentures. That also we will do like this. There is nothing to worry. Very simple chapters, right? So we will stop over here. I will continue with the next session. Thank you so much. Have a good evening.